All right, welcome back, traders. John Caruso coming to you here for the evening of January 10th. We're going to do a quick midweek update. I'm also going to use this as my market insight for my market insight letter in the morning as well. I will be in the Chicago office tomorrow. So I probably won't have a lot of time to write between the commute into the office and the time by the time the market opens up. So we're going to do this on Tuesday evening, recording for Wednesday. We're going to take a look at a couple charts. I'm going to update some of the charts that we looked at on Sunday evening for everybody. As you can see up here, I've got the March S&P 500 up, and we did see the March S&P 500 trade up 60 basis points here today. We did, as you can see, how we have it drawn in here on the charts, we did actually think that following this 11-day consolidation level or consolidation zone that we've been in, we did actually think that we were going to make another break towards this trend line and potentially the 200-day moving average. The trend line comes in at about 39.66, the 200-day moving average up around 39.94. So as you can see clearly, we've tested up in this area already. 39.79 was the high on Monday, and had another push higher here today. It looked like we were going to break down a little bit early on in the day, but then pushed higher, finished up 60 basis points. And I still think we are probably going to see a little more chop with an upward bias in here, maybe over the next 1 to 2 weeks. But then ultimately, we do think that this market is once again going to fail back on the downside. We've got a big period of risk, we think, pegged for February, March, and April, where we could potentially see the market make its bottom for the year sometime in that time frame, that 3-month time frame that we've outlined for everyone. So as you can see, we are getting up here into the sell zone. I don't quite have an immediate term overbought signal just yet. It's reading about 71 here on Tuesday evening. So what I would like to see I would like to see that overbought signal get up here back into about 90 to 95. I'd like to pair that with an immediate term oversold signal in the VIX, which we actually are currently getting right now. I will show that to you here next, where I think that's a high probability bet where you can start resetting some larger sized downside strategies for the market, trying to capture this next leg lower in stocks. It's not going to be easy, though. We'll probably see some check down in here, probably another pop, and then once again, I think that big period of risk is coming. I think it's coming February, March, and April. So we're gonna be on the lookout for that. So that's a look at the March S&P 500. We're gonna flip over to the VIX contract, and we're gonna kind of do a comparison here. As you can see, we had this downward slide. I know it's hard to see the VIX. We actually do have that still registering as bullish trend. I'll kind of do a little bit of a zoom out here, and perhaps you can see that upward tilt, that upward bias that we're still having right now on the monthly chart in the VIX. Clearly, you saw that big thrust higher. That was the pandemic. And now it looks like we're just kind of building this rounded bottom, almost on the monthly, a cup and handle formation that we're seeing on the monthly. But as you can see, we are still registering as bullish trend in the VIX. I'm going to zoom back into the daily. And as you can see, we did send out a report about mid-December, kind of expecting just this sideways chop. We haven't changed any of the drawings on here, and that's precisely what we've seen since we send out that report. I am registering an immediate term oversold signal down here that's giving me a reading of about, honestly, it's giving me a reading of about 1 right now in the VIX. So perhaps we get another pop into here. Perhaps it chops one more time. But as you can see, as we get out into February, we do think that we're going to start to see increased volatility in the market as well. So what I want to do, as I mentioned before, I want to pair that immediate term oversold signal with the VIX with an immediate term overbought signal on the S&P 500. And I think that's a pretty high probability bet to capture some downside, or an appropriate time to start resetting some of those larger sell side positions in the stock indexes. So that is a look at the S&P 500 and the cash VIX index. I'm going to flip over, and we're going to look at the February gold contract. Obviously, gold's been making a lot of noise here in the media as well as on the chart, certainly. Clearly, we saw that big push higher. We did see a lot of things change for the gold market when we took out that 1740 level. It went to bullish trend in our model. Saw a little overshoot. Then we saw that check down. It was just before Thanksgiving. We actually did register a buy signal. I believe it was right around 1740. We put that out to customers. And of course, the market has done nothing but grind higher ever since. It's actually been very choppy in here. We did think that you could be in here buying these dips in gold and selling these rips, and it's been choppy. And now we're starting to extend into that close to that 1900 level in the February gold contract. We do have the 61.8 Fibonacci level that comes in right about 1900 to 1901, somewhere in there. We do actually think that the market is going to experience some exhaustion. We're going to start to see some check down in gold that could carry us into that 1815 to 1795 buy zone area. That's also the low end of our range down there. And I do think this bullish action that we've seen over here, this bullish energy, is going to be enough to prop gold back up for another bounce, potentially into 1850, 1860, before perhaps we see a bigger failure. Perhaps we get some more of that macro risk off, where traders and investors just really kind of scramble the cash and sell down a lot of their positions in their portfolio. We've seen that time and time again throughout these scenario 4 cycles. And perhaps that takes us back into that 1740 area, which I think, once again, that's going to be a key. That's a key pivot area, that 1740 level, where I think that's going to probably be the most ideal spot to be looking at buying gold once again, down there along 1740. So that's a look at the February gold contract. Still has a lot of positive energy here. The other thing I want to point out is I am getting this divergence in price action. You can clearly see price action is higher, but now I'm getting this divergence where my overbought, oversold signal is actually falling. So what that is telling me is that price action is still very much positive here, and that we still might have one more push and thrust higher into the 61.8. You can see the 78.6 up there. That would be a wild move to see over the near term. But of course, with that very pivotal CPI number on Thursday, anything is possible. That 78.6 comes in up around 1975 to 1977. So clearly, I'm getting that price action divergence with the overbought, oversold signal. So what we'll probably see is some more near-term upside, and you're going to eventually see this overbought signal turn back to the upside, register an immediate-term overbought signal, and that's probably the time when you should start expecting a check down in the gold market. So that is a look at gold. I'm certainly I have no gold on the books right now. We did have some trailing stops that we did get stopped out on profitably, nonetheless, but that was much lower. That was down around 1838. So right now, I'm certainly feeling the FOMO in the gold market as it starts to run away here on the upside. So that's a look at the February gold contract. We're going to do one more here, and that's the copper market. Copper's been on a tear here the last 3 or 4 sessions. We did put out a special report to traders. I think it was last week, maybe a week and a half ago. And that was right at the time when copper had broken that minor swing low, which came in at about 372. I think that what that was doing is it was stopping out a lot of CTAs and a lot of managed futures longs that were trying to play for this potential action that we're now seeing in the copper market. Stopped them out on some momentum changes. We did reach the low end of the range, and we've done nothing but jackknife higher. When we took out that 395 level, that was a great place to look at re-entering on the long side on momentum, because that was the top of the range that the market's been respecting now for the past, we'll say, 2 months. We did see that peak over here in the beginning of November. Saw another retest to fail, and then here we are jackknifing higher. We're at 408. That is just about at the 50% Fibonacci level. You've got the 61.8 level up here that comes in at about 430. Now, what I'm looking for in copper is, as you can see, I've got the immediate term overbought signal right here at 92. So what we could possibly see in copper, and I'll put the drawing on, is perhaps we get a little bit of a check down here in copper, something modest. Maybe it drops back along $4. And what that's going to do, that's going to help sweat off this immediate term overbought signal and potentially give you another pretty good buying opportunity that could potentially carry us into that 61.8% Fibonacci level up there at about 430 a pound in copper. So Dr. Copper behaving very well right now on the charts. We'll look for that little bit of a check down. Could be a buying opportunity coming ahead. We do have a seasonal buy signal that is expected to come in around the 26th of January. So we're going to be pairing up potentially a little bit of a check down with the possibility of a good buy signal going out into the end of January. So that's a look at the March copper contract. That's all I have for you this evening. Like I mentioned, I am going to be sending this out with the market insight letter in the morning. We're going to be pretty pressed for time tomorrow morning as we're going to be in the office. That's all we have for you. Best of luck to everybody out there. If you have any questions, feel free to reach out. I'll be around all day. We'll catch you back here next time. Take care.